In the equity markets today, taking a look at the June S&P 500 contract, down 18.5% now from its all-time high on a closing basis, closed down 18.5%, a little bit more than that, only 1.5% away from closing in bear market territory, which we all know the NASDAQ already did and the Russell already did. The S&P is, again, 1.5% away. The Dow is about 4.5% away from that. But today, was it a straight down day? Not exactly. We hit 40.95 on the high side of things, which was up about 0.25% from yesterday's settlement of 40.8475. On the close today, down a little bit more than 4.25%, down 4.33% on the lows today. 39.0775 was the low, and we ended up closing on the future side of things below that 4,000 level. We have now today's close is the lowest closing level since March 25th of 2021, and today was the largest single day percentage drop for the ES since June 11th of 2020. So a very large move. The sector story, nowhere to hide at all, as all 11 sectors were down in the stock market today. Not only that, but you go down to the micro level, and every micro sector within those 11 sectors were all negative on the day. Really nowhere to hide except for the dollar on a flight to quality, the yen on a flight to quality, and the U.S. Treasury market on a flight to quality, as we saw yields drop today. They initially were unchanged on the day, but then we finished with the 2-year down about 2 basis points, make it 3 basis points, the 5-year down about 7 basis points, the 10-year down 10 basis points, the 30-year down 11 basis points, and flattening across the curve to the extent that the 5-year, 10-year yield curve spread is now inverted. And on top of that, Fed speakers are still talking tough on inflation. We had Jerome Powell yesterday basically saying that they had to get after inflation. I'm paraphrasing, of course, but saying that a soft landing wasn't necessarily going to happen, and even seemed like he was warning investors about recession possibilities. And then Patrick Harker echoed all of that today, talking about 3 50 basis point rate hikes, including the one we already have. So the next 2 in June and July. The Fed's still talking tough on inflation as we're seeing equities drop. Biggest single day for the ES again since about June 11th of 2020.